I'm going to show you the foolproof strategy I've used to make an insane amount of money and become extremely profitable with a really nice win rate. But you've probably watched a couple, maybe hundreds of videos exactly like this, promising some strategy, some results, and you're just not getting it. You keep on failing month after month, year after year. You try so hard. You're trying to learn more, get better, but you aren't actually improving. You're going in circles. And I used to feel the same way. You're not stupid. You're just confused. And I'm going to show you exactly how to fix it. And I'm also going to give you my personal strategy that I use every single day. I'm also going to show you 2 principles to avoid the biggest mistakes traders make that stops 95% of people, you included, from becoming profitable. And I'm going to run you through my simple 3-step approach that I use. In the last video, I showed you what questions to ask and how to answer them by breaking it down and using a journal to answer those questions. But in this video, I'm going to give you all the answers. And this has taken me over 5 years of learning, trial and error to make this work. And I've broken it down into as simple as possible that anyone can use it and become profitable. But first, before we actually move on to that technical approach, you have to understand the biggest mistake that traders make. You keep on failing, not because you lack information, but because you know too much. My strategy is amazing, but it won't help you if you can't actually stick to it. Most traders fail simply because they either don't have a data-proven system and they're not able to stick to it. So first, understand that you already know enough to actually become profitable. You know, if you just did what you said you were going to do, you'd be making money and stop failing. This is because success doesn't actually come from knowledge. It comes from your action and behavior. It doesn't matter how much you know if you can't actually act on that knowledge. And this is why most traders get stuck. They know they will be profitable if they did the things they need to do. So it's not about information, it's about behavior. It's about clarity on knowing exactly what you need to do. A pretty good example of this is the weight loss industry. It's a $163 billion industry, but it's pretty simple to lose weight. You just move more and eat less. But why can't people do it? You might have struggled with losing weight yourself. What is the number one reason why you don't follow through when you know you should be doing better? You might think it's willpower. You might think it's discipline, but that's wrong. You can't will yourself into a changed behavior. So how do you actually change your behavior then? How do you actually do what you say you're going to do? Because I might give you all the answers, but if you can't follow it, does it even matter? Well, first, let's go on to the actual holy grail of trading or success in any matter, which is clarity. This is the number one reason why you can't change your behavior. You know you should be doing something, but you can't do it. It's most likely because you aren't clear on exactly what actions you should take. I should lose weight. I should be more healthy. What exactly does that mean though? When it comes to the time for you to make the decision, you get overwhelmed and then you procrastinate. You don't do anything. Your behavior doesn't change, even though you know you should. Simply by getting clearer on what exactly you're supposed to do, you fix this issue. You don't need discipline. You don't need willpower. You need to be intentional and deliberate. What this means, if you want to lose weight, I'm going to eat 3 eggs at this time. I'm going to have fruit at this time. I'm going to go to the gym Monday, Tuesday, Friday, hit legs, do this. And make it easy to follow. So this can be summarized into Occam's razor. This principle simply suggests that the simplest solution is often the correct one. Nature favors simplicity. So why shouldn't your decision making also follow that path? And this is the one key principle that I've used throughout my trading and throughout my trading strategy to become insanely profitable. It doesn't matter how good your trading system is. If it's overcomplicated, it's too complex for you to actually follow it and execute it well. The hardest part isn't technical analysis or trading strategy, finding something that works. It's executing on the system. You know, most of your mistakes come from the execution. So why don't you make it as easy and simple as possible to follow what you know you should be doing? And then choose a system, a path where there's the least potential points of failure. This is why I only have 3 steps in my technical approach. After 5 years. So now that we've covered Occam's razor and something for you to keep in mind and put into your own trading, next we're going to move on to my technical strategy. And as I said, it's simple 3 steps. And I boiled this down into the simplest actions you need to take to be able to get what you want. So step 1 is just to find the direction. What type of trade are you taking? Are you going to look for a buy? Or are you going to look for a sell? And the main key concept that I use throughout all steps is basic, simple market structure. Then I'm going to go through something called candle timing, candle behavior, which really helps you identify when to take a trade and when to expect direction to move in your favor. So these are the only 2 key concepts I use throughout all of my trading. So the only thing you need to focus on when trying to understand market structure is the highs and the lows. This will tell you everything you need to know about direction, areas of interest, and entry models. So for example, every direction can be identified by the highs and the lows. If you're pushing bullish, you're making higher highs and higher lows. If you're pushing bearish, you're making lower highs and lower lows. This is a simplified version, but that's just how you find direction. That's how you identify that. With market structure, that's the only thing you need to focus on to find direction. Pretty simple. And also another really important thing to understand is that price is always going to be in a push and a pull. It's like a wave, an elastic band. The tide goes out and it comes back in. Buyers get exhausted, sellers step in, sellers get exhausted, buyers step in. It's a push and a pull. It's cyclical. And then with market structure, what you're simply wanting to do is trade in the overall direction of that. ideally after it's pulled back when you're trading with volume. So with that direction, with that market structure, you're just trying to ride the wave. You're trying to enter with that overall direction. And this is where you tend to get the best moves with the best risk rewards and the best win rates. Another really important thing to understand is that markets are fractal. So what happens on the lower time frame happens exactly the same way on the high time frame. When you're trying to connect multiple different time frames, you're trying to keep in mind that push and that pull. So let's say we're pushing overall bullish on higher time frame. This might look like on lower time frames that we're making higher highs and higher lows, bit of a lower time frame bullish trend, and then we might shift bearish, create lower highs and lower lows, and then shift bullish again. So being really mindful of where you are in that high time frame context is really important to know what direction you're looking for. I don't think of fractal structure through timeframes. I don't look at high time frame just on the 4 hour, the daily, the weekly. I can look at high time frame from the 5 minutes. Don't think about timeframes as any different to each other. Timeframes all show the same thing. They're just showing different amounts of detail. So the 1 minute shows a lot more detail than the 4 hour. It can be helpful for finding more accurate entries and timing things a little bit better, but it can also be overwhelming. So I tend to think about the duration of price, not time frame. So I'm looking to trade the next 10 minutes. I'm trading based off the previous hour of price action, not off the 1 minute, the 5 minute, or the hourly. I'm looking at duration of price action, not just one simple time frame, because the 1 minute tends to have the most accurate, the most detail. Think of it as like 8K or maybe 4K, where if you go into the 4 hour, the daily chart, you're seeing the exact same thing, just simpler versions. It could be 1080p, 480p. It's the same picture, just with varying amounts of detail. This is simply because higher time frame candles are made up of lower time frame market structure. Each candle has a high and a low. What this might look like, you might open, you might create a low, you might have a bullish uptrend, and then you might pull back a little bit and then close. That lower time frame market structure will look like a high time frame candle, and I'm simply looking to connect all different time frames using candle behavior and market structure. So that's how I look at market structure, as identifying pushes and pulls, focusing on highs and lows, and shifts between a push, a bullish trend, and a pullback, a bearish trend. Next, we're going to move on to candle behavior. This is simply just simplified market structure. Remember? So if we're moving in an uptrend, if we're making higher highs and higher lows, candle behavior states if we're going to continue this overall bullish uptrend, making higher highs and higher lows. When can we expect this to pull back? Well, that would be in the first half of a new candle forming. If this is the hourly chart, you expect it to create the bottom wick. You expect it to pull back on lower time frame market structure within the first 30 minutes, or maybe first 5 minutes. Just you expect to create a bottom wick first and then flip and continue pushing bullish. That's just basic candle behavior. The reason I use candle behavior is that it makes it really easy to give timing to market structure. When am I looking for a pullback? It's in the first half of this candle when this happens. And this is also fractal as well. So if we go on to looking at the daily, it's going to be an absolute game changer, because a lot of people make this big mistake of looking to trade with overall high time frame context, but they're trading it at the wrong time. So especially in Asia, you should be trading against the overall higher time frame. In Asia, if the previous day closes bullish, you should be looking to take a sells to create that bottom wick first. So bullish close here, you push bearish in Asia to create that bottom wick. And it also happens on the weekly if you want to trade higher time frames. The previous week closes bullish. What do you do Monday, Tuesday, Wednesday? You create that bottom wick, you reverse, and then you push bullish Thursday, Friday. This is all fractal, happens across all different time frames. You close bullish Monday, Tuesday, you create that bottom wick, you reverse, Wednesday, Thursday, Friday, you push bullish. This is a very simple trick that is an absolute cheat code for timing your entries and timing direction and just general timing of market structure, because you're not just trying to find what and where, it has to also be when. Now that I've found what type of trade I'm going to enter, either a buy or sell, next is time to find where I want to enter that buy or sell. So for areas of interest, I just use basic zones, basic highs and lows, still using that market structure. And a pretty easy way to find this is just where are you expecting price to react to, or where has price reacted to in the past? Basic pattern recognition. So I just draw a zone around highs and lows. You can use it across different time frames. Look at the hourly, get these highs here, maybe this kind of area of interest here. You have lows around here, but simple, basic zones. And then I might go on to lower time frames and refine it into lower time frame highs and lows. So you're not trying to be the most accurate, because accuracy comes from the entry model. You just want to find a general area of interest of where you're looking for price to react to take your trade. So now that we've found our zones, we have our overall direction, and we've done maybe a little bit of refinement, stepping onto 1 minute structure, identifying one minute highs and lows to draw zones around. We're then going to move on to step 3, which is the entry. This is more about when, it's more about timing. And this is the entry model I use 95% of the time. So if I just put in a 1 minute type 3, just by having that one simple entry model, I have a 78% win rate. So this entry model goes back to that basic market structure that we're talking about, highs and lows. What you simply want to look for is a shift between a push and a pull. That is when, that's what you're trying to time. And it can just be broken down into a change of character or a type 3, a market structure shift. There's two main ways you can define it as: a change of character, where you go from making higher highs and higher lows to breaking a low, making a lower high and lower low, and vice versa for a bullish change of character. A type 3 or market structure shift is just a more decisive change of character, a more decisive shift in market structure. You go from immediately breaking a high to breaking a low. Volume shifts immediately, and then you enter on the pullback. I just aim to set my stop loss above a previous high and target a lower time frame low or low time frame area of interest. Again, using market structure. For a bullish example, I look for the inverse. You're making lower highs and lower lows. You break a high after breaking a low. Pretty decisive shift in market structure. And then you push bullish. Now, just before I go into the trade examples, I want to give you one more quick tip. Going back to Occam's razor, you want to have the simplest, easiest approach to use. So after 5 years, I just focus on taking 1 to 2 trades, trading at one time, using one pair. I just trade gold at the second hour of Asia, and most of my trading sessions last for 30 minutes to 45 minutes. But we're going to go over some actual trade examples that I pre-called for my community, so you know it actually works. This was a trade I took on Monday, where I identified before the second hour of Asia, which is when I trade. This was simple alignment of multiple different timeframes. I identified timeframes as low time frame, middle time frame, and high time frame. And we're going to go through this. I forecasted this exact move, taking my entry and showing my exit. But first, let's start with overall direction. We'll start off on high timeframes using market structure and that candle behavior. So firstly, I start off on the weekly time frame. Because it's Monday, I like to have a look at how the previous candle closed and then identify what we're going to look like for the rest of the week. It's pretty clear that this is extremely bullish. We are testing all-time highs, but this is a very strong bullish candle close. Now, if we drop down to the daily time frame, we see also another bullish candle close above the previous highs. So just with the daily and the weekly time frame, using that candle behavior, I'm expecting in Asia session, especially in the first half of that week as well, for us to move bearish to create that bottom wick. And this is just of candle behavior to help give timing to that market structure. If I was to identify this of market structure using that simple push and pull, where price has a push, buyers get exhausted, sellers step in, you have a pullback, it's pretty clear that we're testing into all-time highs, and we've had a shift on middle timeframes where we've created a new high, we've broken a low, bit of a pullback. Middle time frame direction would be bearish. You're making lower highs and lower lows. In the lower time frame sort of structure, we're ranging. So you wouldn't look to take a trade of this. You look for it to take out a high, take out a low. So we've got our overall direction. We're looking for it to move bearish. And we've got our area of interest, which is those highs and lows. Pretty simple. Exactly how we're looking for that high time frame to pull back as well. We're kind of looking for the same thing on the lower time frames. So middle time frame had a pretty big bearish move. Now we're looking to correct some of that to continue that high time frame move. So this is how you give context. This is how you actually use and connect different time frames or durations of price. So there's always high volume at the second hour of Asia, and we're coming into this area of interest. So this is where we want to enter. Now we're just looking at when we want to enter. So the simplest way to find an entry model is just to go into that line chart on the 1 minute, and it's really easy to see those highs and lows. We're in this general area of interest, the reaction area. You don't have to be the most accurate with this because the accuracy comes from the entry model. In this example here, we have a bit of a change of character, a bit of a market structure shift. On the 1 minute time frame, this will look like even lower time frame structure, but we break a high, bit of a break of a low, and then what we're simply looking to do is for it to break that low. So very nice, very simple, a little lower time frame market structure shift, the entry model we're looking for. And what this will look like on high time frames on the 5 minute chart is some 5 minute candle behavior. You can look for an entry on that top wick candle being formed. So exactly how we're looking at direction on daily, weekly, you can look for that top wick to be formed before you push bearish. So you can set your entry at these little lows, stop loss above the previous high on that 1 minute change of character, and you can look to enter on that pullback. And you can just target the next high time frame area of interest if you're trading with that high time frame context, and we are. Very nice, clear daily, weekly structure. And it's a good time for us to look for a sell. Always want to give your stop loss breathing room. So we've identified our direction, given context across different timeframes, aligned that, waited for the lower time frame to shift using that entry model with that higher time frame. It's so easy to stick to something when you're clear on exactly what you need to do. So that played out really nicely. 1 to 6.5 RR trade. I don't normally go for that big of a move, but moved really nicely. Now there's not going to be a setup every single day. So I was kind of sleeping on that day. But we come into another day that I'm confident. You really just want to trade the times where it feels easy to take a trade. So the second hour of Asia is 12 p.m. This is at 11:49. I post my setup, looking for a similar sort of move. I trade the same time. So you tend to see the same sort of moves happening at the same time. Very simple, very easy to replicate as well. Because if you want to get consistent results, you need consistent actions. You need to be doing the same things at the same times using the same approach. So for this setup, we're looking for kind of the same sort of thing. The daily has closed pretty bullish, so we're looking for a bottom wick to be created in Asia session in the first half of that high time frame candle. And with this sort of high time frame candle behavior, simply if you're trading in London or New York, you can look for that push of that high time frame candle or the extension of that, the opposite of what you're looking for in Asia session. So if we go onto 4-hour chart, we can see this overall shift of market structure. We've broken a high, then broken a low. So that 4-hour market structure wise is giving us a bit more context to look for that sell. And to stack more confidence on that, we've had this big pullback of this big shift. So we might be looking for a correction of that. Price is a push and a pull across all different time frames. So we might have a bit of a correction of this previous move. It could continue, it could not, but this is a extremely high probability move with all this market context, with that high time frame candle, with this 4-hour shift. And if we just look at a high time frame area of interest, we can just look at the 4-hour chart and put a zone around that. Pretty simple, pretty easy. We can refine that a little bit more going on to the hourly. So the two main areas of interest that we're looking for a reversal from, it would be this 4-hour area and then this hourly sort of highs here. So now it's time to wait for our entry model, to wait for lower time frame, middle time frame market structure to shift with high time frame market structure. If we just go on to my analysis, my forecast, I was just looking for a simple shift again, a type 3. And I'm going to show you the two types of entries that I took, a lower time frame example with more of refinement and then a high time frame example. And we're also going to go over some hourly candle behavior with the best time to look for reversals in any session. So we were kind of in this lower time frame range, but now that we've broken above highs with that volume coming in at the second half of Asia, we can now look for that reversal. The best reversals tend to happen at the start of a new 30-minute candle. So halfway through the hourly candle. This hourly candle has opened up and pushed bullish straight away without creating much of a bottom wick. So going back to that candle behavior, if you push extremely bullish without creating much of a bottom wick in the first half, you can expect a reversal around the second half of the hourly candle. Exactly the same what we're looking at on the daily, the weekly. We can use that refinement to the hourly to add timing to that market structure. When are we looking for this lower time frame shift? In the second half of this hourly candle because of how it opened. So we're still making high highs and high lows, and then we have a pretty decent big shift here. So that's our entry model there. For my first lower time frame entry, I took it at the break of this low, this little lower time frame shift at the breakout, but I'm going to show you two entries that you could have taken here. So as always, stop above the high, and then you're going to be targeting a previous low. The refinement of my area of interest on the lower time frame was just this basic sort of structure here. And when is this in the hour? It's in the second half. It's 12:40 that we have that reversal after creating that big top wick and then pushing bearish. That played out pretty nicely for a 1 to 2 risk to reward. So very nice entry, pretty simple, pretty easy. And then we'll move on to the middle time frame example where you have a bit of a bigger pullback. This would be a middle time frame shift. So you don't have to trade 1 minute time frame off this little shift and be extremely accurate with your timing. You can wait for a bigger shift in market structure and just look for an overall pullback of that. Price is fractal. It moves the same way across all different time frames. And this creates another great opportunity for that counter behavior. You have the hourly close bearish, 30-minute close bearish, 15, 5 minutes. So all these little time frames are looking very nice, very bearish. And it's simply looking for it to create a top wick first and then push bearish. So aligning that counter behavior with that market structure to give timing to that pullback. So the entry was just at this refinement of this low time frame area of interest. And I further refined inside this little area of interest. So remember, candles are just a simplified market structure. So you can trade ticks of price just using 1 minute candle behavior. And my favorite sort of entry on 1 minute is that this can be seen as a shift because this 1 minute candles are making higher highs and higher lows. You kind of stagnate a bit and then you break this 1 minute candle low here. So exactly how we're looking at on high time frames, I can look for an entry off this little pullback here, put my stop loss above that high. Instead of having a bigger stop loss, I'm refining further, connecting low time frame, middle time frame, and high time frame. So taking a little low time frame shift in a middle time frame shift with overall high time frame context. This is how you get extremely profitable, really nice trades. And also another trick I use, I'm always looking to stack my areas of interest with something called entry relativity. So in the previous move, we've had a previous push to the downside. I'm looking to enter on the pullback in the upper half for a sell position or the lower half for a buy position. So I'm looking for it to pull back at least 50%, ideally more, to then look for a lower time frame reaction to take a sell for further refinement to stack probabilities in my favor and get a bit bigger of a risk reward. And because you're targeting a bigger time frame, a middle time frame sort of entry, you can have a bit bigger of a risk reward. With this one, it took a little while to play out. Very nice, very simple, nice, easy move. And if we just look at that, very nice. And this was all pre-called before I even took the trade. So now that I've gone through my technical approach with some trade examples, and I showed you why it's so important to keep a simple approach, now we're going to move on to how to actually put it into action. This is kind of the most important step. You've got all this information now on what works, but it won't mean shit if you can't put it into action, if you can't execute on the system. So first you have to understand two different knowledge types. There's implicit and explicit knowledge. I've given you a lot of explicit knowledge. So this is knowledge that can be verbalized and explained. Unfortunately, I can't transfer all my intuition, all my thousands of trades I've taken over 5 years into your head. So you're going to see the same sort of moves differently to me. You shouldn't expect to put this approach into play and become instantly profitable. You actually have to take action on that knowledge. It's like watching a video on how to ride a bike or how to shoot a basketball hoop and expecting to be Stephen Curry hitting 9 out of 10 3-pointers after watching a simple video on how to shoot basketball hoops. You need to take action and build that implicit knowledge. You actually have to practice the skill to build that skill. Shocker. But traders don't do this. You actually have to give the strategy your time, your effort to build that intuition, to build that experience, to be able to make the strategy work. So the one thing you should do after watching this video is actually put it into practice. You might have to rewatch the video a couple of times, but take some trades, journal those trades. Look at if you made some mistakes, if you could have identified direction or entries or areas of interest better. Take action on this knowledge. Otherwise, if you don't do anything and you're just watching this video, it's entertainment. You're not actually trying to become profitable. You're just wasting your time. So first things first, it's going to be a bit confusing. You're going to make mistakes. You're going to lose a lot, but that's the whole point of learning. You can only learn after making a mistake. You can only change your behavior through data points. So focus on discipline. What are the actions you can take every single day to put this approach into work to make it profitable for you? And then just continuously practice, track over time, and you'll adapt the approach to your unique psychological factors. Unfortunately or not unfortunately, you're not me. So you don't know how exactly your unique physical and psychological traits are going to react to this theory. Some people are really good at trading lower time frames. Others are better at swing trading. Maybe some people are better at following trends, while you're better at taking reversals. You don't know how you are going to be able to implement that theory, how you're going to react to that. So just take action. The quickest way to find out if something works is to actually do it. So hopefully this helps you understand how to actually build a profitable trading strategy, and you can copy all my answers. And if you put in the work, you get similar results. And if you want to join the community to get feedback, to ask questions, and to speed up your learning process, you can join the link in the description below. You'll get access to all my data and you'll be able to follow and learn from my trades every single day. We have so many people using this simple 3-step approach and getting insane results from it. And if not, you can still join the community for free and ask questions and get feedback and help each other out. But otherwise, I'll catch you guys later. Hope this helps.